All right, ladies and gentlemen, hello, and good morning. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Wednesday, ladies and gentlemen, Wednesday, the 8th of October, 2025. So yes, welcome everyone. Look, the market. We'll talk about it, and we'll talk about gold. We'll talk about the stocks. We'll talk about in general everything what's happening right now, or at least I'll try to capture a lot of things. Look, this session is meant for because this is a live session. This session is meant for live interaction. So feel free if you are joining in and this one in as a live session. So feel free to message me, like put a comment out there, or just ask a question if there is something that's bothering you or you would like to find out. But hey, the questions are always welcome. So feel free. If I know the answer, I'll tell you that I know the answer. But if I don't know the answer, I will tell you I don't know the answer, but I'll find that one. Look, ladies and gentlemen, so before we go any further into this, into looking into our wild market, let's quickly read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. So yes, in the meantime, I'm going to put my usual good morning in the chat room. Good morning, everyone. There we go. Boom. There we go. So yeah, also just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. And also just a quick mentioning that I'm going to be running a webinar, a Zoom webinar, which we need to register for. Basically, it's going to be on the 30th of October, and I'm going to be looking at Bollinger Bands. So this is the third webinar in the series where I'm picking up on the most popular indicators and applying it in real live market action to see if they're any good, if it's actually worth looking at them. So yeah. You'll find the link for this webinar in the description of this webinar, and yeah, we'll go from there. Ladies and gentlemen, let's have a look quickly at the economic calendar. What's happening? Let me just refresh the page. And one big thing that came out this morning, we had the RBNZ interest rate decision. There we go, 2.5. 2.5, this is what I was talking about yesterday in my video, like is RBNZ going for 25 or 50 basis point cuts? Now there we go, we got the 50 basis point cut moment here, and look, the forecast was for a 25 basis point, we went for a 50. Okay, look, what can I say? It's I think that the market, I think that they know that they need to boost the economy very, very quickly. I think that they know that I'm talking about the RBNZ, and they need to go and do something about themselves, because again, honestly, like New Zealand growth, I talked about this in this video right here. You can check it out yesterday, and I said that maybe they will go for 50 because they need to boost their growth, because again, look at the current situation and the on the Q-on-Q GDP growth rate is that the latest number came out at minus 0.9. The forecast was for a minus 0.3, but it came out at minus 0.9. So that's already a bit of a disappointment, but the previous one was plus 0.9. So that's a big move, and I think that this is what's worrying for New Zealand, and I think that they, could end up in some problems. They need to boost their export, certainly at an expense of the New Zealand dollar, because again, they're devaluating down, so they might create a little bit of inflation later on. So for now, their inflation sits at around let me just double check, 2.7. So it's still manageable within RBNZ target, but we know that we are expecting a higher number going in further. At least that's the idea here. But let's see what's going to happen, of course. Anyway. So yeah, like I said, the situation in New Zealand, certainly they're dropping the rate. They're trying to boost lending. Let's see if they succeed. Time will tell. At the moment, the only thing that we know is that we're seeing the New Zealand dollar dropping. I'll jump into currencies in a bit I'll go through that section. First, I'm going to go through indices, then currencies, then commodities, and then cryptos. So yeah, what else? What else? We don't really have. China is still China is still chilling. They're still on holiday. They're coming back tomorrow, if I'm not mistaken. So yeah. Look, the other piece of information that we can keep an eye on, and that's going to be for today, the EIA crude oil stock change. So that's kind of, and the FOMC meeting minutes. The only problem is that I never see the meeting minutes kind of as something really big, because again, it's just confirming, what they have said during the meeting. But for me, the more important part is what's going to happen during the October meeting here on the Fed side, because at the moment we're expecting only one rate cut, but again, given that we're having problems for now with the government shutdown, we're not seeing any progress in there. Markets are worried because markets are not getting any data. And yeah, it's a little bit of a pain in the bottom, to be honest, because again, we are not going to get the inflation numbers next week. We're still not getting the NFP, and I think that this week we're not going to get the NFP unless a miracle will happen. Initial and continuous jobless claims, those already also not going to come out tomorrow. So we are. Let me just double check. The calendar still has it, initial claims here, but yeah, you see, we have two data sets we need to get here. Anyway, I don't know if this is going to happen or not, but yeah, like I said, keep your eyes on this market. So yeah, tomorrow, in terms of economic data, this is what we should be getting, the initial and continuous jobless claims, but I think that no. I think that we're going to be focused on consumer inflation expectations from Australia, or actually the trade balance. Now that's going to be an interesting moment here from the German side. Actually, that's today. No, sorry, today. It's Thursday. Sorry, why am I getting confused with dates, honestly? It's Thursday, no. On Friday, normally we should be getting, we should be getting other data, not the NFP. I'm talking about this Friday, because normally it's in the beginning of the month or the end of the month. So, yes, we're waiting for the NFPs as well, because those are, I think that those are kind of expected to come out bad, and maybe everybody's trying to close their positions, as quick as possible, because again, we're seeing this big tech rally. We're seeing the market exploding. I'll show you what I'm talking about. So now Nikkei. Nikkei did rally perfectly here, perfectly nicely to the upside, but we overcame the 47,000. We traveled further north. We hit the 48.5 zone, 48,000 and a half zone. So yes, and now we're retracing back down a little bit. Now, of course, the interesting part for me is could we hit the 50? Hungry as always, right? Look, let's go slowly on this, okay? Because again, we had a decent rally. The Japanese political life is now kind of circulating around supporting rate cuts. So that was the kind of the initial jump. But in general, I would say there are hurdles, there are global hurdles, and at the moment everybody's talking about AI. Everybody's starting to, see those deals coming through. OpenAI with NVIDIA, AMD is also jumping in there. I mean, there's a lot. There's a lot to talk about. Sorry, it's AMD with OpenAI, and NVIDIA has some other. I mean, Yes. So yes, the chip deal between OpenAI and AMD. There we go. I mean, honestly. So this is what I'm saying is like now it's getting really confusing in terms of like everybody's trying to make these big deals. It seems like I think everybody's trying to launder money or something like that, you know, because for me that's kind of the image that I'm seeing, and it seems like, you know, we're trying to pour the money somehow out of everything, and you know, by creating deals. Like I said, for me, like I said, at the moment when it's everything is circulating around AI, you're getting so much money into AI. Where is that money coming from? That's the big question right now. Everybody understands that, you know, now, oh, okay, you know, they're getting it from somewhere, right? Investors, venture capitals, and private equity. Again, I see this as a problem. I see this as a problem. It's like, you know, when everybody starts to put money which is not there yet into something which is really questionable. Yes, maybe it could be possible, but it's still at the same at the time right now it's still questionable, you know, how it's going to go. Anyway, I don't want to be like the party pooper here or anything, but in general this looks a little bit on the negative side, to me at least. Let's see how this is going to, and the thing is, another thing is energy. Where are you going to get all the, you know, the required source of energy? You know, is the national grid capable of, you know, supporting all this? Again, there's a lot of questions like that. So yeah, you're gonna fit everything into, if it's in the U.S., if you're gonna fit everything into Arizona or something, you know, the whole desert is gonna be covered in solar panels, maybe. Anyway, looking at this right now, look, for now, that's how I think the market. I think the smart money does understand that the market is already a little bit, you know, overdone to the upside. A little bit of correction could be nice. Maybe we could see a little bit of profit taking. Yesterday we saw the US indices drifting to the downside, and yeah, it was a little bit of profit taking, I would call it, you know, this way. And certainly, for now, watching all these indices, Nikkei drifting a little bit to the downside. It's a little bit of correction, to be honest. If I jump into, I'm not going to jump into China yet because, again, there's no point. But Dow Jones Industrial Average, yesterday we corrected a little bit lower. That's absolutely logical. And we've drifted back below this little hurdle, this highest point of September. Now, I'm going to switch on another chart, and you'll see why I still have this on the chart, because I'm looking at the monthly chart, and too many hours here. I'm looking at the monthly chart, and basically what I said to you previously, that if we travel higher, let's say on a monthly basis, you know, we travel higher, we create, you know what, let's remove all this. We go create a new all-time high, but at the end of the month we struggle to remain above the previous all-time high, or the previous high here, so that it was the previous month's high. Then to me that's a bearish indication. That's a signal there where, you know, we could see a bit of a reversal here, a little bit of profit taking. That's what I'm talking about. So in general, we already had a good run, you know, 1 2 3 4 5 6 months. This is the 6th month that we're seeing some positivity. But like I said, let's not rush into things at the moment. Like I said, it's a very tricky moment. When we had a 5-month run here, with the 6th month was a negative one. Also, look at this scenario. 2024 May, we started off to the upside. Boom, boom, boom. There we go. 5 months in a row. September, October time we came. What happened? We went for a new all-time high, but then we retraced back down. Of course, don't get me wrong, November came and we rallied, and this is what I'm saying. I'm still not excluding the upside scenario. No, there could be still some more upside. But the thing is that maybe this month could be a little bit of a cautious one, you know, because let's face it, November time, December, we're going to be in the Christmas rally, or theoretically should be in a Christmas rally. We should see some action. We should see some maybe retailers picking up pace. So maybe this company could, perform a little bit better in the US, because again, look at this. I mean, this is a target. We've reached a good area of support. If we continue to hold here, maybe there's a little bit of a bounce moment here possible. But anyway, that's just an idea. So, these companies are going to be in the spotlight. Luxury brands are going to be in the spotlight as well. So keep your eyes on that. For now, yes, we're seeing a little bit of a retracement, which is fine. The S&P as well doing the similar thing. Look at this on the S&P side. Also, I said to you that if we somehow drift back below, below the September high, I would say I'm going to lean a little bit more towards the downside. Like I said, more profit taking could be on the table. So let's keep an eye on that one. NASDAQ, of course, NASDAQ yesterday reached that, jumped above that 25,000 zone. Well, it wasn't yesterday, but it was trading above that 25,000 zone, but then it quickly reversed back down, and there we go. We're now holding above, a little bit above that 24,781 zone, which is the highest point of September. And if we somehow drop below it, I'm going to lean a little bit more to the downside. So that's what I'm going to do. And for now, of course, and like I said, I'm not really discounting the upside scenario yet. Nope. I still believe that there could be a chance for another rally, but at this point, probably the easier option is just to wait for a push above the current all-time high near the 25,000 and the 25,063 zone-ish, something like that. So the current all-time high. So if we can clear that, I will go to the upside. Let's jump into Europe very quickly, ladies and gentlemen. Let's have a look. Europe. So Germany is open and Germany is flat. Germany is trying to figure out what the hell they want to do, because again, we have some data coming out. New car registration numbers are going to be coming out from Germany, so keep that in mind. Tomorrow on Thursday, we're going to get the trade balance, so keep that in mind as well. This is something that could, determine the next path for the German index. In general, looking at this, I am still somewhat bullish. But we're near all-time highs, the 24,639-ish zone on the cash. If we can clear this, then yes, of course, I'll go for that 25,000 zone. In general, German DAX is one of the best performers this year. Look at this. Let me just show you what I'm talking about. So yes, we had this April decline, but everybody had it. And I think that, where is that opening? There. So yes, at one point we were in negative territory for the year. That was spectacular, to be honest, to see. And then quickly, boom, look at this. First we were gaining around 18%. That was already crazy for the year. That was already good. Then we declined. We wiped out everything. We kind of went into negative territory by 7%, and then we recouped everything. And look at this. At one point we were gaining around 23% for the year. So if you in general, if you have probably took profit somewhere here on the peaks and took that 17% ish, and then you kind of reinvested it and went long where we opened up when we, let's say, had the crash, and then we pushed back up, and then we entered here, let's say, on the same level where we opened up. Then you probably gained around another 23%. So congratulations, 40% just from DAX. Wow. It would be great to foresee this, but I understand it's a little bit of a difficult one. Anyway, look, the question for me right now is, are we going to surpass the 23.7 territory on the DAX, on the German index? In terms of percentage gain, for the year, are we going to go higher? In general, I would love to see that 25,000 zone being hit, just because it's a nice, beautiful psychological number, and then we could see a little bit of a correction back down. So that's why, like I said, I will remain cautiously bullish at this point. Let me get rid of this. I need to This is a little bit in the way. So I'll remain cautiously bullish, but I'll get more excited with the upside if we do clear the current all-time high. Let's have a look at what's happening in the UK. Yeah, this one just continues to rally. Look at this, boom, to the upside. Look, I draw this Fibonacci extension. It's a tentative one, don't get me wrong. This one is taken from the low of the lowest point of June to the highest point of August of this year, and then to the lowest point of September of this year. And we're currently stuck around 61.8% on the Fibonacci extension, around that 9,509 zone. So we're currently stuck here. But let me actually try to see if this makes any sense. Let me jump into a monthly chart, and yep, let's see if this is gonna make any sense. Okay, if I do something like this, measure it from the bottom of of April here to the high, the highest point of June, and then to the lowest point of June, then you'll see that the 9,546 and becomes an interesting target. It's not far, actually. We're not very far. We're only about 40 points away from reaching that 61.8 potentially. So let's see if we can reach that area here, and hey, maybe we could see a little reversal back down. If we do surpass this barrier, then 9,774 and 75-ish is the next good target. Like I said, for now, let's be very careful. Let's jump into the DXY. Because why? Because it is pushing. Yes, it is pushing nicely to the upside. Look at this. So DXY, the dollar index, in general, the dollar, US dollar, could be seen as the next safe haven. I know I talked a lot about the US dollar, and I'll say it again, what I said before, that at the moment, nobody needs a strong dollar. Why? Because you're selling weapons. You're selling weapons. You're selling, you're selling your other you have your other exports, and you want to make them more attractive on the global arena. So you need a weaker dollar, and when other currencies are stronger against that. But now, I will say one thing, that I think that the time now we're changing a little bit. Now we're going into the holiday mode. So your U.S. consumer, if the U.S. consumer feels that, wait, they cannot, they don't feel the strength of the US dollar, they cannot, say, afford this, afford that. So you kind of need to boost the US dollar from the ground here and push it back maybe towards that 100 level at least, or maybe above that. And this is how, the U.S. consumer could kind of feel a little bit more happy. So you need to keep the population happy, right? So you're now giving them an opportunity to go shopping. This is like I said, the market will enjoy the moment that the market will see that, oh great, like everything is fine, everything is, we're better off here in the US, we can afford more. So yes, there we go. I'm not saying to bring the US dollar back all the way to 110 or something like that. No, I'm saying like a nice retracement back to 38.2, something like that, at least to 101.5 could be the case. Again, judging from this technical picture, we're seeing a break of this downside line. So in a way, this could change the game. If we do remain below the downside line and we continue to trade, when we continue to struggle, let's say, to overcome that downside line, I will scrap this idea and I will see a possible move to the downside. Also in general, what can I say? There is this, like I said, there is this moment that gold could become a little bit, over expensive, and somebody needs the next big safe haven, right? And maybe we could see a little bit of profit taking in gold, and we could see, again, temporarily, because still gold could continue rallying, and I'll jump into that in a bit. And maybe then, people will need to say, hey, I don't want to jump into gold because I think it's overvalued at these levels. I don't want to do that. So maybe I will jump in, later. Maybe I'll see a little bit of a retracement or something like that. And then that's why, you need the next big thing, and the next big thing could be the US dollar. So let's see what's going to happen here. Anyway, let's jump into the commodity and let's pick up on that gold and look at this. Boom to the upside. Really crazy moves. Really crazy moves. So look, the 4,000 we reached today, this morning, during the Asian session, and we hit that, and honestly, it just continued to rally. 4,036 now. How much more? Now, I was talking to my colleagues and we were kind of, I was looking at different levels, where next, and I'm jumping on my beloved monthly chart. So I'm measuring this Fibonacci extension here from the bottoms of 2015 and this low here, and all the way to the high of the of August of 2020, and then to the low of October of 2022. So we can see that the next potential target, in a way, after the 4,000, because the 4,000 we hit, we overcame that. So now we're looking for the next one. The next target could be the 4,310. And if you remember, and if you watched my videos here recently on gold, which I did, watch this one if you're trading gold. So I talked about it and I said to you, look, ladies and gentlemen, we're going through some historic moments here, and this is a very parabolic move. Going back into history, going back into history, we had these parabolic moves, but okay, this one was not a very parabolic move. This was just a gradual move. So the only one that kind of really resembles what's currently happening is the activity seen back in 1980, ladies and gentlemen. So 1980, we had the financial crisis. 1980, we had the kind of the next, the second oil, the oil crisis kind of continued, and excuse me, we saw issues with oil, where oil was rallying, and it was rallying like crazy. So I would say be careful right now, right? Okay. Let me just. So it was also the Iran-Iraq conflict, war, where the U.S. got involved as well. So yeah, in general, like I said, keep your eyes on that, because again, something like maybe similar could happen. Hopefully not, but yeah, the world is very unstable right now. But just the thing is that, if we're doing something similar here, we're rallying, seeing this major rally right now, then people could ask me this question, like if we're expecting some bad times, shouldn't gold be rallying during bad times? I will say something that I said before already, and I'll say it again. Gold rallies before. It can extend a little bit into the bad times, like for example the 2008 financial crisis, which had happened here. We had look at this. We first rallied before when the financial crisis started happening. We were kind of okay. Then we started rallying like crazy. Then the financial crisis kind of got into full swing in 2008, and then we started seeing a correction back down in gold. And this is the thing. So you start selling gold. The governments buy gold initially before the financial crisis, and central banks buy those. And then when the times go bad, you need cash. You cannot, what you're going to do with the gold piece of metal? Not much, to be honest. Yes, there is value. However, you need cash at the moment. You need something, to convert. To convert, what's the easiest thing to convert into food, right? Into shelter. It's cash. Cash is more liquid. So gold is nice, yes, for storing wealth, but in terms of when liquidity is needed, then cash is king. Now, what I'm saying here is that because we're not really seeing this kind of big correction in the stock market yet. What we're seeing right now is just kind of, a little bit of a profit taking here and there, So I could say that we could see gold continuing to rally. And 4,300, I have this as an interesting level. I think it's quite doable, judging from the swings that we're seeing right now. So I'm not saying that we're going to reach that, no, but I'm just considering that as an option, because if we continue to trade above 4,000, I'm not really kind of disputing the option of hitting that area. It's a big one, but hey, there I think that we could see some further action to the upside, because this right now is crazy. So if you ever, there, I heard one millionaire, billionaire, I can't remember, like saying, I was attending a conference of his, and he said one thing that really was stuck in my head. If you think that the market is done with the move, it will move a little bit more. So that's what I'm saying. If you think that 4,000 was like that ceiling or anything, it will move a little bit more. Because look, when we were talking about 3,000, right, back in, where was it? March time, right? March time, we were hitting 3,000. This year, it was already seen as a crazy move to the upside. But what happened the next month? We just continued to rally and hit the 3,500. So that's what I'm saying. So I wouldn't be surprised if we do something similar again. If we do and go and hit that 4,300. So again, ladies and gentlemen, I would like you to be careful, especially for those who are trying to short this this commodity right now. We don't really have any signals yet. For me, let's say the big signal would be if we would suddenly see a rapid rise in a very short period of time, let's say in a matter of a week, and then let's say in the beginning of the week we rally strongly, but then at the end of the week we start correcting very sharply to the downside. Now that for me would be an indication, and I would see this as a possibility of of seeing maybe like more a little bit of a correction back down. But again, not at this point. At the moment, I'm being very, 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 very careful, because at the end of the day, silver still has to reach the $50 mark, right? So that's what is all about. It's all about silver. Now I'm joking, of course. No, silver needs to reach that $50 mark. I talked about this, and I said to you, look, I'm watching this upside line, which is capturing the peaks here. So to follow this logic, then there is a little bit of a room towards almost to that 51 zone. Let's see what's going to happen there. And then after that, again, similar, it applies the same logic on silver here as well. We are crazy here to the upside. Look at these rallies. These are historic. Ladies and gentlemen, remember this. We are at historic moments right now, because after this, we have a prolonged kind of, moment of nothing happening here. And look at this period here. This was like after it dropped from almost like 47 here, it dropped all the way to 4, almost 5 per ounce, for silver. Look at this. And then from here, it was in 82. We only started rallying back in 2003. Again, before the financial crisis, a few years before the financial crisis. So these things happened, like I said, when we were ready to hit, the stock market. Here, that we had the financial crisis, we corrected, and then we had a big rally moment here to the upside. That was 2011. There were some issues in the market in 2011, but then we got corrected, and look, and then we stabilized. I would say this way. This, like I said, to me is worrying. At the same time, it's very nice because it could present itself with some nice opportunities. Platinum, very quickly on platinum, similar story, good run here, but this one is a little bit further away from hitting those all-time highs, and that's why again, for this one, I'm aiming for the upside. 2,000 could be an interesting target for platinum, but certainly being very careful with that. Palladium, now this is a one that I was talking about a lot, and look at this, ladies and gentlemen. I said to you previously, keep your eyes on this one. In the beginning of this month, I also said to you, watch out for this 1,250 zone here, and this looks like a possible double bottom here, with the neckline being here, and there we go, pop up and away. Look, Palladium is a little bit of a different category, and I'm seeing value in Palladium. I think that this could continue rallying, but Certainly. Let's not be way too greedy. Let's be cautious. If the main metals will start correcting, this one could correct as well a little bit, but in general, I think this could be the next interesting thing. Copper, let's have a look at copper. Also flying high, 1,000, there we go, boom. Copper futures. Look, I will say all-time highs, and I would say this way that I would prefer this one to actually reverse back down a little bit at some point. It will do that, but again, we're waiting for that catalyst. Jumping in very quickly into other soft commodities here. Let's have a look what's happening with coffee, my beloved coffee, and there we go on the monthly chart here. We are seeing some nice movement, some nice action, but in general, I don't know if this is not going to confirm something like a double top here, but let's see. Cocoa, cocoa, right? Okay, we're drifting very nicely to the downside, and we already drifted nicely to the downside. So my question is, can we actually rebound from this territory? Because we're on the monthly chart. This is a monthly chart, by the way. On the monthly chart, we're now resting on the 50-day EMA shown here as the green line. So if we can rebound from it, great. But if we cannot, then the next target is the 100-day EMA. Sugar, my beloved sugar. For this one, I need a daily chart. So I talked about this little hurdle, the 16.69, and what I said to you before that this clearance here, this could happen. It could happen. It did happen. But let's see if we can stay above this 16.69 zone. If we can somehow push back above it, I'll consider a further move up. The good part here is, the positive part here is that we are still above the 100-day EMA shown as the blue line. Soybeans, looking at this one here, look, soybeans is going to be a big topic between the two big leaders when they're going to meet. So yes, one leader is trying to convince the other leader to, for him to buy those those soybeans, which the first leader is producing. So the next leader, second leader, is stopped buying those. So I don't know how that's going to go, honestly. Like, this is going to be an interesting show, but I think that, yeah, maybe they will reach some sort of a deal. Anyway, let's quickly have a look at US oil, ladies and gentlemen. WTI oil, boom, pushing back above the 61.5 zone. I talked about this. I said, look, if we're going to drop and stay below the 61.5, I'm going to consider a move lower. But if we are going to see pushback inside of it, back above this, look, this for me right now is a little bit of a worrying signal, because I'm trying to understand this. What is it forming here? Because at the moment, it's, look, we can do a lot of things here. We can maybe consider this as a possible falling wedge, but it's not a very attractive falling wedge. It's like trying to see something where it's not. So if it is a falling wedge, then we could see this one breaking out higher. However, is it a falling wedge? I don't know. Like, I don't think so. So for now, I'm going to keep a bunch of downside lines on the chart here, and this is what I'm going to consider. And if we do start clearing one of those, then okay, I'm going to go to the upside. But at this point, it's way too tricky. I would say, if you're trading oil, congratulations, is pushing higher right now, but is it actually worth, is it actually worth right now going long? No, I would say it's a little bit. Again, look, you'll be the judge. You know yourselves better. I'm just gonna say that while we remain below all my EMAs here on the daily chart, I'm still bearish. Just noticed that the Bollinger Band looks a little bit in the way here. Let me just maybe change the color a little bit, something like that, maybe something bluish, so that it would be there, it would be noticeable, but not too much. So maybe something like this could do the trick. Okay. Anyway, so yeah, so at the moment, like I said, yes, we're seeing some positivity, but is this going to be sustained? I don't know. Natural gas, we're now kind of flirting with that 3.5 zone. Let's see if we can clear the 3.585 zone here. If we can, great. I'm going to go to the upside. Okay, ladies and gentlemen, let's jump into the Forex world. Where is that Forex world? I jumped into commodities first, so but anyway, it should have been Forex first. Anyway, AUDUSD, just a quick update. What's happening here? We're drifting lower, but we're resting on the 50-day EMA, so there is still a chance for a rebound and a push back up. If we're looking for some lower levels, then I would say a drop below this 0.6520 here could do the trick for a few more sellers. Yep, there we go. If we're gonna break the upside line, then of this one, which is taken from the low, the 24th of April, then yeah, I'm gonna consider a move much lower. But at the moment, look, I don't like this. In general, it's stuck, and I'm not going to touch, to be honest, AUDNZD until I see some sort of like clarity. AUDNZD, now this one's a little bit more interesting. There we go, boom. So as I talked already this morning about the New Zealand central bank, which decided to go for a 50 basis point cut. Like I said, I talked about this in the session here in yesterday's video, so you can always check it out. But yeah, we rallied, we're pushing higher, and I think there's still a chance for this one to continue moving further north. And I said to you that my next target is the 1.1490. That's the highest point of September of 2022. I think we're on the right track. Let's see if we can reach that one. AUDJPY, the Japanese yen continues to suffer, and look, at one point, the Japanese yen will have to pick up buying interest. However, the problem right now is that the newly elected government is a little bit pro cuts, and that's why the Japanese yen is not very excited, or should I say the bulls of the Japanese yen are not very excited, because they're expecting maybe a possibility for some rate cuts happening. The sun is shining into my neck here a little bit, but anyways, the sun is always, it's good to look at a little bit of sun. Anyway, NZD USD, there we go, beautiful decline here. Everything is fine, everything is according to the plan. Look, I'll say it this way, if we do stay below the 0.5755 territory right here, then yes, I'm going to go further south. By further south, I'm talking about maybe this little area right here, the 0.5649. And then we'll take it from there. For the upside, I would like to see a push of somewhere back above the 0.5845, and then we'll just take it from there. NZDJPY, yes, this one's drifting back down. It seems like the New Zealand dollar is gaining a little bit of strength against another weak currency, which is the Japanese yen. So let's see, the battle of the weakest. Who will win here? EURUSD very quickly continues to slide. Yes, because the US dollar is picking up interest a little bit again, due to the fact that maybe it's somehow related to what I said in the beginning of the video. So what I said in the beginning of the video, that maybe before the holidays we could see DXY kind of strengthening a little bit, because again, you need to make the US consumer happy, that they can afford more in the shops. So yeah, EURUSD is drifting lower. The euro is right now going through a little bit of not turmoil, but some issues, because again, we're seeing issues in France, and that's what's a little bit damaging, and not giving any reassurance for the euro. So now then, I'll shift a little bit backwards, because again, the sun is like hitting me here and just straight in my head. Okay, look, let's have a look at what's happening with EUROJPY. Beautiful movement here. So if you are trading something like that, look at this. This is amazing. We're overcoming the highest point of 2024. There we go. We're hitting a new high here. I mean, this, in general, if it would have been last year, we would be already hitting alarm bells and saying, oh my god, like, Japanese yen is collapsing, and there we go. But it's against the euro. It's not against the USJPY, not against the US dollar. It is pushing higher, but it's not at levels where we saw them back in, the beginning of this year, last year, where it was around 162, so we need to get to those levels first. And at the moment, looking at this picture, look, on the USDJPY, I said to you before that it's an interesting moment here. We're reaching this upper side of the possible rising wedge pattern, which according to all the TA rules tends to break to the downside. And again, are we going to see this one breaking to the downside? Only if we can get a break through the lower side here. But yeah, at this point, we're knocking on the door of the upper side of this formation. Let's see if it can hold. If it cannot hold, then certainly prepare yourselves for a possible move towards slightly higher levels, like the 154.80 zone. USDCHF just pushing nicely, as you know, working together with DXY. So yes, we're near key area resistance 0.8014. I think it's a good barrier to watch. If you can clear that, then great. I'll go for some higher levels. Let's see, USDCAD. Yep, this one is currently looking at the daily chart. It's above all my EMAs on the daily chart. Yes, so great. But I think a clearance of the 140.16 is required. Oh, and by the way, on the euro side, I forgot to mention about one currency pair, EURONZD. There we go. I'm loving this pair. Why? Because it's kind of an indicator of financial problems. So you see these big spikes. These are, you know, spikes when we're having financial crises. I mean, okay, it happened when the crisis happened. It still continued to, the New Zealand dollar continued to devalue, and you know, we was the same story with 1992 here. We had some issues here as well after the Gulf War. There was some you know, problems, and we were, like I said, we were devaluing for till the end of, you know, till the 1992, and then the market kind of rallied again. So it was rallying in 1994, 93, yes, and yeah, like I said, it's all, this pair shows that that there is a potential problem happening, or it could, you know, be showing this with the spikes. It could be showing that we're, you know, coming closer to an end of the problem. Now, with this one, you can see that we're rallying already, but you know, we're being careful. If suddenly we see a problem in the stock market, and by the way, I'm looking at the monthly chart. So basically, to fill this gap here all the way to this downside line, potentially, there could be a few months. It could be actually a couple of 2 or 3 years, you know. So with the magnitude of these candles, remember, every candle here is a monthly candle. So with the magnitude here, it might, like I said, be quite doable. We could see a financial issue happening maybe next year, and basically then, you know, we could see this pair continuing to rally. I'm not saying that we're done with the upside. I think that we still could go further north. Very quickly on GBPUSD. While we're on the monthly chart, okay, we're stuck right now. We're not really doing much, so that's why we jump into daily. And on the daily, it shows us the same story. We are waiting for this one to make some sort of a move. We're waiting for this one to kind of either clear one of the levels here that I've highlighted, and then we'll go from there. Because at the moment, I am being very careful with GBPUSD, because again, I don't know what it's gonna do. If the dollar will rise, then we could see a nice move below the 200-day EMA here on the daily chart. GBPJPY, beautiful, beautiful movement here. Certainly, it's saying that, hey, a possible reversal will come, but not yet. So we're now on a beautiful rally, and I think that there is a very good chance of reaching this 208 zone, which was reached back in 2024. So let's keep an eye on that one. We're only about, like, you know, 4 yen away from hitting this, so hey, why not? Okay, look, let's jump into, finally, for dessert, let's jump into crypto. So yes, let me just, oh, no, that's it. So crypto, ladies and gentlemen, Bitcoin. So after creating a new all-time high, that was not yesterday, on Monday, the crypto reversed back down, and I talked about this on Monday, because what I said to you that look, Bitcoin is rallying, okay, great, but is it actually, is it going to be sustained? Well, we don't know, because looking at other cryptos, quite reputable cryptos, Bitcoin Cash, for example, this one was not really like exploding to the upside. No, Ripple, similar story. It was not. It was not pushing even higher above, above the highs of last week. Same story in Bitcoin Cash. Same story was on. Sorry, not the same story. On Ethereum, we also pushed, but we were struggling with these levels. So in a way, it's it's not really something that kind of was confirming this big rally in Bitcoin. Again, it's like I said, it's for me, it was like I was seeing red flags. I talked about this on Monday in my morning in my Markets Talk webinar, and the same story is like on Litecoin as well. Look at this, we're retracing back down. I'm not saying that I'm not saying that I'm bearish, but the fact that it's correcting lower here. Look, on Litecoin, it's an interesting one. I'm considering actually a larger correction back down, because we broke the downside line and we pushed higher. But what I said to you previously, whenever we break a trend line, we tend to revisit it from the other side. And this could be one of those moments where the crypto could go towards maybe the 111 territory. Let's see. Dogecoin, again, this one looks like it's forming a rising wedge pattern. It seems like right now we're forming a lower high as well. So the question is, can we go and break this upside line taken from the lowest point of June of this year? And if that's the case, if we can break that that line, then yes, it confirms that it's a nice rising wedge pattern. Polka dot, a little bit of a choppy session here. I mean, this is really annoying. If you are trading this, this is just a stop loss taker here, and I don't really like this. So for me, I'm trying to stay away from something like that and just waiting for some better times. And finally, Tron. It did have a push higher, did break the downside line, but look at this. It quickly reversed back down, back below this downside line. So in a way, this is not really reliable anymore, this downside line, so we can get rid of it. So what I'm going to keep an eye on, just purely support and resistance. And at this point, I'm going to take a very conservative approach here. If we want to see some lower levels, then I will say that, wait for a drop at least somewhere below this territory right here, below the 0.33 zone, and also at the same time, maybe we could clear the 100-day EMA shown here as the blue line, and then we'll just take it from there. For the upside, I would prefer to wait for a push at least above the 0.3474. That's the current highest point of this week, and if we can clear that, then yes, certainly I will go for some higher areas right here. So, ladies and gentlemen, that is a wrap. That is a wrap. Thank you very much for watching and listening. I really appreciate your time, ladies and gentlemen, your views, your likes, your comments, everything. I really do. So don't forget to like and subscribe, the usual things. Please, that would really help me out here. And certainly, like I said, I hope you enjoyed the session and you will join us and join me in the next one on Friday. We're gonna wrap up the week. We'll see, what worked, what not, and hopefully we'll get something, out of the U.S. government shutdown. Some news, some clarity. What's next, and yeah, we'll go from there. Ladies and gentlemen, as always, stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. And I shall see you on Friday. Bye for now.